In the first chapter of your book, they show you these charts as a learning tool to show you how the assets and the liabilities and equity accounts are all affected by transactions, and to give you an idea of how the equation actually works. So to show you how this works in Connect, I'm going to use problem 7a, part 2. It's on page 40 in your textbook if you want to follow along. The transactions are all listed up here, but I don't want to scroll back and forth, so I'm just going to use the book. On May 1st, it says G. Graham invested $40,000 cash in the company. So you would just plug in $40,000 there. And then on the other side, you would have to plug something in over here because it's hard to see, but your equal sign is here. Assets equal liabilities plus equity. So the 40,000, not under accounts payable, goes here, and it's not liking me. Okay? And then if you look at the bottom, it shows you the balances in each account. Again, on May 1st, the company rented a furnished office and paid cash for May's rent. Now it tells you to use reductions to account balances with a minus sign. Connect is fussy, so if it tells you to do that, make sure you do that. So we're paying the rent, cash is going to go down, so let's go minus 2,200, and that would be an expense. They don't specify what kind of expense, but since you're paying the rent, that's what it is. Expenses are the cost of doing business. On the 3rd, the company purchased $1,890 of office equipment on credit. So under office equipment, we would put $1,890, and then we have to have something else happen. If it's on credit, it's a payable. On the 5th, paid cash for this month's cleaning services. So cash went down. Don't forget your minus sign, $750, and that again would be expenses. So follow across to the 5th, and we have $750. On the 8th, the company provided consulting services for a client and immediately collected cash. So cash is going to increase by $5,400, and if I can follow across, revenues $5,400. On the 12th, the company provided $2,500 of consulting services for a client on credit. That's accounts receivable. They will receive the money later. And revenues. Remember the revenue recognition principle. Company paid $750 for salaries. Cash went down. Salaries expense, $750. On the 20th, received cash payment for services provided earlier. That's this one. So we're going to reduce that. They no longer owe it to us. Company provided consulting services on credit. Again, $3,200. And revenues. Each time you do this, it updates your balance. On the 25th, received the cash for those services. And subtract it from here. It's showing it to you with parentheses. In accounting, parentheses indicate a negative number. Company paid cash for the office equipment purchased earlier. $1,890. That's the office equipment isn't going to change. That's still sitting there. This is going to change. That shows what the company owes. They no longer owe it. They paid it. Think of it as paying your credit card bill off. Purchased $80 of advertising. Cash payment is due June 1st. I'd call that accounts payable. And it's an expense. On the 28th, paid the salary again, minus $750. $750. Paid $300 cash for the phone bill, minus $300. $300. Am I on the right line? Yes. Paid cash for utilities, minus $280 and $280. And withdrew cash for personal use, minus $1,400. This is a withdrawal, $1,400. And that's how the charts work, how you fill them out. If you add across, it should balance on both sides.